We've been now from Sydney. Happy Christmas Eve to you, Peter Chilton. He is, of course, the Constellation Capital Management Investment Analyst. And you're smiling now, but again, this interesting development of perhaps a counter-rival bid from International Coal Ventures, or ICVL. I mean, there you are, you're a man who obviously holds Rio shares. Does this worry you about the idea of a price war, more intense, higher bids coming forward?
I suppose you'd have to expect that with assets like these in Mozambique, you'd be surprised in a way if you didn't get a counter bid.
What do you think is going to be actually, do you think there's any sort of meat to the bone on this? Will there be an actual counter bid, or just rattling the cage, if you like?
Yeah, look, I think, you know, there is a higher bid. I mean, there might be a bit of a bidding war, but you're really talking about undeveloped assets. The real capital to be spent is further down the track on the infrastructure and rail and port. So it's not like you're buying a company which is already established. You're actually buying an early stage project.
Talking about this, Peter, of course, Riversdales were 11.7 billion tonne coal resource in Mozambique. I mean, that's obviously coking coal is in huge demand, particularly from China, for example. I mean, how great a deal is this for Rio Tinto, and how pleased are you as a Rio shareholder that it's happening?
I think it's very good for Rio. Rio was long thermal coal, but very little coking coal in their portfolio. So I think what this does is plugs up the gap they had and gives Rio the potential to build a real coking coal business of size to rival that of BHP ultimately. Maybe not quite the same size as BHP, but certainly a big world-scale project in coking coal.
Another big issue is, of course, the shareholders of Riversdale need to approve it. It would seem that there's no objection so far, but clearly Tata Steel could be the main objector. But again, so far, all is good, right?
So far, and Rio Tinto in the past has said, no, we're prepared to do joint ventures and so forth. So there's always those sort of possibilities in this deal.
Peter, looking at the history of Rio, of course, buying Alcan back in 2007, leaves it with $40 billion of debt just before the global financial crisis. Obviously, it would have perhaps got your nerves a bit frayed, if you like. But I mean, with now, are they in a much better shape, Rio Tinto, to go on the M&A path?
Well, yes, they are. They're in a much better shape. I mean, at the end of this year, or rather end of next year, FY11, they have very little debt at all. So they're in a very good shape. This potential acquisition is only about the 10th of the cost of the Alcan deal, and they can develop the project, you know, over a number of years. So Rio Tinto is in a much better shape, and it's a far more manageable acquisition anyway, and will maintain their current balance sheet strength and enable them to maintain a good credit rating.
Out of interest, in the last 3 months, Peter, have you been increasing your shares in Rio Tinto or other mining stocks?
Generally speaking, we've actually been adding to our portfolio in terms of mining. We'd already had positions, but we've actually been increasing them slightly.
And that includes Rio, does it? You've actually bought more shares in Rio?
That would be correct, yes.
So if I can just use your brain for a minute, looking forward for the entire resource industry, there you are sitting with that beautiful scene behind you of the Harbour Bridge. I mean, what's the Peter Chilton look to 2011 and, of course, the take on resources? I mean, do you believe it's going to be as strong performance as it was this year in the last 5 years?
Look, it may not be quite so strong next year simply because a lot is already priced into shares. But I think physically I would still expect a very strong year in terms of sales. I'd expect prices for coal and iron ore and some other metals to remain strong. So I think next year is going to be another good year for the miners. Maybe not quite so strong in share price performance, but still a good year. I think looking 2 or 3 years out, though, you might well see that a lot of the shortages we're currently seeing will be a little bit less as new supply comes on.
And Peter, final question for you, if I can. Of your portfolio, which one particular company really is exciting you for next year?
Probably exciting is probably too much of a word, but I think the outlook for both Rio Tinto and BHP, I think over the next 12 months, it still looks pretty good. And another stock which has been recovering quite nicely is alumina as well. So depending on how the alumina price shapes up, I mean, that's also a stock which has been adding to our portfolio.
Have a nice Christmas. Peter Chilton there joining us from Constellation Capital Management in Sydney. Thank you much indeed for your time, Peter.